Okay, hey, Dan Fitzpatrick here, and I want to look at financials today because I mean they so many stocks, like the growth stocks, all of these stocks, they have been pretty choppy, and they can be a little tempting, a little enticing, like you're a moth and they're flames. And so you're always kind of sucked back in because, oh, remember the glory days when things were so good. And a lot of them are still doing well. Don't get me wrong. I'm not really like bearish or negative on those. Instead, I'm being a market observer and looking around saying, well, what am I missing? And one of the things that I think that we are excuse me, one of the things that I think at least I haven't really been looking at is the financials. These guys are going pretty good. And the nice thing is they're generally in these kind of uptrends. If you're a gunslinger, if you just like stick and move, hit and run, this and that. These aren't really your stocks. Just trade the earnings pops and drops and do that and you'll be fine. But if you've got a life and you just want to live your life, but you want to be in stocks that are working, that are going to be paying you off, I've got some of these for you today. So I'll show those to you. Let me share my screen. By the way, if you're not a member of my community, Stock Market Mentor, I want you to be there. I do videos every day, and they're on stocks, they're on options. People are making money. I've had people not have had, I do have people that have been my subscribers for 15 years. Most of our members, except the brand new ones, most of our members have been around for years and years. And there's a reason for that. And it's not because they forgot that they're making monthly payments on their credit cards. It's because what they're doing is they're making money based on what we're doing. And they're also learning how to trade. Because the bottom line is, while I hope this does not happen, hey, I could pass away tomorrow, and then what are you going to do? Hey, I wonder what Dan's thinking now. Well, not much. But if you understand how to trade yourself, you're all good. And I focus on risk management, not on counting money after taking massive amounts of risk and happen to be, hey, it hit on red. I'm good. So I want you to consider doing that. I promise you, you're going to do really well. Everybody else does. Why not you? By the way, it's $7, so think about it. It's like a cup of coffee at Starbucks, which by the way is close to breaking out. So look at it. Look at JP Morgan. This is trade. If you're using the 8-day, this is the little green line. If you're using that as a reference for the trend, I mean, you can do that, but it hits it all the time. But if you're looking at the 20-day, that can be a better deal. By the way, this little blue line here, this is the volume weighted average price of the 20-day volume weighted average price. So when we like to see stocks drifting along up here. So this is in a really good situation. I'll just put it this way. It's above the 20. It's above the 20 VWAP. This is where you want to be. Morgan Stanley, no thank you. Not really my deal. Goldman Sachs, not really my deal. But did I mention JP Morgan is doing pretty good? How about Bank of America is doing pretty good? Use the 20-day VWAP as your reference. Everybody's a winner up here. By the way, this is like at an all-time high. Bank of America, who knew? And Wells Fargo, I'll set an alert here. But this is what I want you to think about, and then I'm going to let you go. You could look here at Wells Fargo, and you are, and say, well, I don't want to buy JP Morgan or Bank of America because they're already running pretty good. So I'm going to wait for Wells Fargo to break out. Okay. I think if it does break out, notice I said if, not when. I'm pretty sure it will, but I don't know. But if it does break out, then you're probably going to make some money on that. But here's my question. Why is this still in a consolidation pattern. Why is this not moving the way Bank of America is and the way JP Morgan is? What is wrong with Wells Fargo? It could start moving, but it's really not. And so I think that's the most important question you can ask yourself when you are considering buying some of these secondary stocks in a sector or an industry, because the primary ones have gone up too much. And I'll just put it this way. Don't you want to bet on a winner as opposed to somebody who's placing or showing or in the middle of the pack, and you're hoping that they can actually overtake the winner? Bet on the winners. And so that is why I would say Bank of America or JP Morgan. Those are your two stocks that you want to be in. And these are for longer term, I would say kind of longer term investments. A weekly chart running right up along the upper Bollinger Band. Similarly with Bank of America. And these aren't super volatile stocks. It was at 57 back in the day. Now, this is up 14%, but it's been a nice smooth ride. So anyway, those are my suggestions to you, that you look at those two stocks. And here's the thing. 4 words. Let's make some money.